Taxes suck. There is no doubt about that. And that's why it's a good thing you have someone like me who understands this stuff so they can tell you estimated tax payments certainly suck, but there's a way you can figure them out, and that's what we're going to take a look at. It's not fun to try and do it. Not everybody, few people understand exactly how this needs to be calculated. It's a little convoluted, I'll be honest, but you can find your way to the right payment here. Now, who is this for? Anybody who's not getting their income primarily or their taxes withheld primarily from withholdings on a W-2. So anybody who owns a business with significant income or has 1099 income, running a side business that way, this is for you. You're gonna wanna be making estimated tax payments, or what's gonna happen is you're gonna have hundreds of dollars in penalties show up on your tax return that A, are getting paid off, that don't have to be paid, and B, you may not even ever see them or know they exist unless you're doing your tax return on your own or having your CPA or your tax preparer show you how they're showing up in your tax return. Rest assured, if you're not making estimated tax payments, it should be, they are showing up there. So let's walk through this a little bit. On your tax return, you have taxable income. Fair enough, right? You're gonna have a bunch of income. Eventually it's gonna end up, once you run it through all the thresholds, blah, 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 it's gonna end up as taxable income. That amount is gonna directly lead to the amount of taxes that show up on your tax return. That's what in total, you'll have been expected to pay throughout the year, and then finally with your last tax payment. So what happens here? Let's bring this taxes over here. You have a tax amount, and you're gonna have withholdings if you have a W-2 job. So we're gonna subtract that from your taxes, and that's gonna lead to, let's just call it leftover. A leftover amount. Now we don't wanna double underline that, that's kind of silly. We got a leftover amount, we're gonna circle it. Leftover. That is the amount that they expect you to pay in over the course of the year, AKA estimated tax payments. So this leftover amount, you can break it down this simple. This is probably the best way to think of it. You just simply have a leftover amount here. You can divide that by 4. Let's call it leftover. Divided by 4 equals estimated tax payments. Don't worry how terrible that writing looks. The important part is you got a leftover amount after your withholdings. You have a tax estimate. You're gonna have this, you divide that by 4. What do you do with that? You pay that quarterly, quarterly. You're gonna pay that at the estimated tax payment deadlines, and that is ultimately what's going to give you the right amount of estimated tax payments. So you do not get penalized at the end of the year. Now, right now we can understand this. As 2025 taxes have come to an end, we know exactly what's on that tax return. How are we able to translate that to the future? Well, that's where some advanced concepts come in. You want to make sure that you have a projection of what your income is going to be, what your income is going to be from your business and your 1099s, so that you can estimate this leftover amount that you need to be paying in estimated taxes. There are 2 thresholds I'm going to put up on the screen. One is 100% of prior year tax. One is 110% of prior year tax. If you make a certain amount of money, they're going to want you to pay in a little more to reach what's called a safe harbor threshold. But these are ways you can very specifically pay enough into estimated tax and know that you're doing so you don't get penalized. They give you these safe harbor thresholds to allow you to meet them so you don't have to worry about paying estimated tax penalties. That doesn't mean you won't have a leftover amount due on April 15th that you need to still pay in. That's another way you can be balancing cash flow throughout the year. Should I increase or decrease these estimated tax payments so that I have a certain amount of tax I pay at the end of the year? Again, that's a more advanced concept for you to work with your CPA or your tax preparer on. But understanding that relationship, how we get to the estimated tax payment, how we get to the leftover that ultimately gets divided by the quarters, that is the important part of this. Make sure you understand how that flow works. Don't worry how poorly I've written it here again. But again, if you can estimate that leftover amount that's not being withheld, that you're gonna owe at the end of the year, you can break that into 4 pieces, pay them quarterly, and you're gonna do yourself a service and make sure you minimize or completely eradicate any of those estimated tax penalties.